In this video, I'll tell you exactly what a credit union is and how it compares to a bank. And we're starting right now. Hey guys, Elliot here. So whenever you need to open a savings or a checking account or need a loan, you probably think of a large bank like Wells Fargo, Bank of America, Chase, or Citibank. But you actually may not need to go to a bank at all and instead can go to a credit union. So what exactly is a credit union and what's the advantage of going there versus a bank? A credit union is a private, member-owned, non-profit cooperative financial institution. A bank, on the other hand, is a for-profit public corporation that has investors and shareholders. So the main difference here is the ownership structure, but this does make a credit union a very different sort of organization. Because credit unions are not driven by shareholders, their profits are recycled back into the business in the form of lower fees on loans, higher dividend rates on accounts, and usually better, more community-oriented service. Now, as far as what they offer, credit unions are very similar to any other banking institution. You can open various types of accounts like checking, savings, and money market, as well as buy certificates of deposit. You can also apply for personal, auto, and student loans, as well as mortgages. So the financial products are really the same, but because of the nonprofit charter of credit unions, they can almost always beat the large banks in terms of interest they pay and with lower fees on the various accounts and services. Credit unions also stress how they are community-oriented, and many credit unions offer financial wellness education and sponsor local community activities. With a credit union, you also get to vote on policy and direction of the organization regardless of how much you have a deposit with them. Speaking of deposits, it's important to note that credit union account holders are protected, just like bank customers are, up to $250,000 per account. While banks rely on the FDIC to guarantee this protection, credit unions have the National Credit Union Administration, or the NCUA, that offers the exact same protection. Now, there are some downsides to credit unions. For one, you need to be a member, and not everyone may qualify. For example, military or defense credit unions may require that you're an active or retired military member or work for the Department of Defense to open an account. So be sure to read the eligibility requirements before opening up an account or applying for a loan. Another issue may be that credit unions by definition are fairly small and may not have a lot of branches, especially outside of your immediate region, so it may be an issue if you travel a lot and need access to physical branches. Some of the smaller credit unions may also not offer as many products as the large banks can. In general though, for most people who require just basic banking and loan services, a credit union is well worth looking into. Customers like the better rates and lower fees they often get, as well as the friendlier and more personalized community-based service. In the end, it's really what priorities are more important to you, but now that you know more about credit unions, be sure to at least check them out. Okay, that was a quick explanation of credit unions. As always, if you enjoy this content, please do like and subscribe, and I will see you in the next video.